Hey there! Today we're talking about a topic that could impact everyone. Whether you're a homeowner, a renter, or someone dreaming of owning a home one day. The housing market is always a hot topic, but with Trump back in office, a lot of people are asking, what's going to change? And here's something you might not know. Housing costs make up a huge portion of inflation, about 2/3 over the past year. So, when Trump says he's going to lower housing costs, that's not just about saving money on rent or a mortgage. It could affect the entire economy. But how? Well, some of his proposals sound promising, like reducing regulations to make construction cheaper. Though others, like tariffs and immigration policies, could push costs even higher. So we're going to break it all down today. We'll look at the policies Trump is proposing, how they might help or hurt the market, and what it all means for you. Understanding these changes could help you make smarter decisions about your housing and finances. Now let's start with Trump's plan to reduce housing costs by cutting federal regulations. On paper, this sounds like a win. Regulations can make building homes more expensive and slower, so simplifying those rules could lower costs. For example, home builders have long criticized rules like energy efficiency standards and Clean Water Act regulations that add to construction expenses. If those are rolled back, it might make homes cheaper to build and buy. But here's the catch. Most housing regulations are actually controlled at the state and local levels. Things like zoning laws, deciding whether an area can have apartment buildings or just single-family homes, are what really limit new construction. And Trump has historically supported single-family zoning, which could restrict the very type of development we need most: affordable, higher-density housing in cities and suburbs. So, while cutting federal red tape might help, it's not the full solution. Now let's talk about federal land. Trump has proposed building homes on government-owned land, especially in the western U.S., where there are vast stretches of federally owned property. This could be a game changer for states like Arizona and Nevada, where housing demand is high, but land costs are a major barrier. Imagine thousands of new homes built in these areas at lower prices. Sounds great, right? Well, not so fast. Many of these federal lands are in rural areas without the infrastructure, roads, utilities, schools that are needed to support large-scale housing projects. Without those basics, it's hard to see this plan solving the affordability crisis in urban and suburban areas where the demand is highest. And then there's energy policy. Trump and his team have promised to lower energy costs by increasing fossil fuel production. While this could reduce some construction costs, like transportation and materials, it's unlikely to have a significant impact on overall housing prices. You see, energy costs are just one piece of the puzzle, and they're not the biggest driver of housing affordability. Speaking of affordability, we need to address mortgage rates. Trump has promised to bring them down, even as low as 3%. But here's the thing, presidents don't directly control mortgage rates. Those are influenced by the Federal Reserve, inflation, and the bond market. And ironically, some of Trump's other policies, like tax cuts and tariffs, could actually push rates higher by increasing inflation and the federal deficit. Higher tariffs in particular are a big concern. Trump has proposed steep taxes on imports, including building materials like lumber and steel. This would raise construction costs, making new homes more expensive. We've already seen this happen with tariffs on Canadian lumber, which drove up home prices in recent years. If those tariffs expand, it could hurt home buyers and builders alike. And then there's the labor issue. Trump's plan to deport millions of undocumented immigrants could have a ripple effect on housing. The construction industry is already facing a severe labor shortage, with immigrants making up about a quarter of its workforce. Removing a significant portion of these workers could slow down construction and drive up costs even more. So, while deportations might reduce demand for housing in some areas, they could also make it harder and pricier to build the homes we need. Also, let's not forget about federal housing assistance. During his first term, Trump proposed cutting programs that help low-income families afford housing, like rental vouchers and funding for affordable housing development. If similar cuts happen again, it could make housing even less accessible for those who are already struggling. So, what does all this mean for you? If you're a potential homebuyer, Trump's policies could have mixed results. Lower regulations and increased housing supply might make homes more affordable in some areas, but tariffs and labor shortages could offset those benefits. If you're a renter, changes to housing assistance could make renting more difficult for low-income households, even if some rents stabilize due to increased supply. For investors, the picture is just as complicated. A more volatile housing market could create both risks and opportunities, depending on how these policies play out. The bottom line is this: Trump's housing plans are ambitious, but they're also full of trade-offs. Some could genuinely help reduce costs and increase supply, while others might unintentionally make things worse. The key will be watching how these policies are implemented and whether they're balanced with the realities of the housing market. Now, I'd love to hear from you. What's your biggest concern about the housing market right now? Are you hoping to buy a home, or are you more focused on rent prices? Drop your thoughts in the comments, and let's keep the conversation going. Thanks for tuning in today. Remember, understanding how these changes might affect you is the first step toward making better financial decisions. Stay informed, stay prepared, and I'll see you next time.